Right, good morning then everyone, as we are just about to head into European trade on Tuesday the 23rd of July. We'll have a look across at the headlines, see what's going on, what's up, what's down, but a pretty strong reversal in risk sentiment. Stocks are lower, US dollars higher. We'll talk about that in a minute, but Japan's Nikkei extends losing run as strong yen offsets chip rally. Strong yen putting a bit of a dampener on Japanese stocks, but with the kind of change around, or with the intervention from the Japanese, from the Japanese, it's kind of worked in their favour up until now. Fortunately for them, but luckily for them, stocks are kind of turned around. Been a bit of risk off trading in recent trade over the last few days, so something we definitely need to keep an eye on. Aussie Kiwi dollar struggle on China's rate cuts, yen gains. Australian New Zealand dollar struggled to regain their footing on Tuesday after China's move to cut several key interest rates. Some interest rate cuts from China in terms of trying to boost their economy. Still fears over their economy, and that has been a case really since COVID happened. Obviously, the reaction to COVID was a bit more aggressive than countries across the world. They kept their lockdowns longer than countries across the world, and then once they opened back up, the kind of global economy kind of started to trickle along rather than romp higher. So there have been difficulties around China for a while. It continues to put a bit of pressure on Australia and New Zealand. Obviously, you got politics. Then difficulties in America. Obviously, Joe Biden has stepped down from the next presidential election in November. It looks to be Kamala Harris for now. I'm not sure markets are really too on board with that. I think with the assassination attempt on Donald Trump a couple of weeks ago, or about 10 days ago, I think that has strengthened his stronghold on the presidency in November. So political uncertainty in the US, it did have a bit of political uncertainty, and still probably a bit of political uncertainty in the UK, and then governments changing across Europe. So a bit of political problems in the world at the moment. Not really sure where the world is heading where the Western world is heading in relation to that sort of stuff. Kind of combination of things really. Markets sort of unsure of where to go, and record high in stocks have kind of pulled back. You can see stock indexes 1 week percentage change, negative across the board. US negative across the board. In Asia Pacific, it's still month to date percentage, 3 month percentage change is still good, but the short term trend has now changed. Does the picture change long term? Not really so sure. I don't think it does really, to be honest with you. I still think there's kind of more positivity for stocks than there is negativity, but these things cannot continue higher forever. They do have to have pullbacks. Pullbacks are healthy in trends. They're not something that's unhealthy. They are healthy in trends. They are needed in order to gather more buyers. So personally, I'm not too concerned about this for the moment, for this moment in time personally. Oil has had a bit of a downtrend. Lower, is pretty flat today. We'll have a look at oil in a bit. Bonds pretty mixed. US yields pushing higher or trending higher. Doesn't look it here, but on today's session so far, but they are trending higher, making higher lows and higher highs. That is then supportive for the US dollar, negative for equities. And personally, did US yields give back a bit much? You come across and have a look across to some charts. Have a look at these bond yields. You can see them trending higher. The 10-year, 2-year, both trending higher. But if you come back to a 4-hour chart, you see this super aggressive downside in the 10-year, 2-year. Was that a bit overcooked? It does look like a bit of a pullback in the 4-hour time frame, but was it a bit overcooked? You had some weak economic data. A few weeks ago, you had weak manufacturing services, NFP. You had slightly lower inflation, but ultimately inflation still isn't where they really wanted. The market went and priced in a couple of rate cuts, kind of risk off move, kind of down. Stock indexes moved higher, lower, should I say, off the back of weak economic data. But was it a bit overcooked? Certainly, I think with the US, have a look at the US dollar, and the US dollar is strengthening. Aussie and Kiwi, obviously China worries contributing to that, but dollar CAD trending higher, dollar Swiss trending higher, euro dollar cable both trending lower. I think with the US dollar, obviously it had a bit of downside You go back to a 4-hour chart, even back to a daily chart, you can see kind of April into June had a bit of downside across the Aussie, Kiwi, Euro, Sterling. You know, the charts look a bit messy when I got lower time frame analysis, but you go back down, they're all right. They kind of had a bit of weakness with surrounding the US dollar, but ultimately, like, interest rates in the US are probably likely to remain higher than most of the rest of the world, right? The US economy is still performing better than most of the rest of the world, albeit a couple of weeks of weak economic data doesn't really change the long-term picture as such. So there's still some positives with the US dollar. Maybe the bit of downside was overcooked. You're seeing a bit of a pullback, but you got this trend line on euro dollar, which for me is interesting. If you can get through that trend line, that should probably spark a fair bit of upside on the US dollar. So that's something I'm personally keeping an eye on as we go through. And I think maybe a bit of the bad news is kind of priced in, or a lot of the bad news is priced into the US dollar. You have seen a bit of a turnaround over the last few days since kind of Thursday of last week. Does that continue? I'd say probably, and the balance of probabilities probably should continue, due to the facts that I just mentioned. Stocks, on the other hand, you see the S&P and the Nasdaq have kind of changed, certainly on my trend indicator, pointing towards more being a buy at this moment in time. It's only a short-term bounce back, only a little short bounce back, but I still do think these are probably worth buying back into. Certainly the S&P and the Nasdaq. When these two have been trending higher, the Dow Jones and the Russell have struggled somewhat, so I'd stay away from the Dow Jones and the Russell. But the S&P and the Nasdaq, I still do think there's upside left on them. Whether that's right or whether that's wrong, if you have that mindset when analysing markets, you come out on top more often than you won't over the long run, certainly in the equity space. So bond yields, will keep an eye on bond yields. If they keep trending higher, probably makes the equity trade a little bit difficult. If they keep trending higher, certainly makes the US dollar a more attractive proposition. So I think you've got to trade either way on this. Personally, I'd rather be long stocks, but if yields continue to trend higher, it makes long stocks a little bit tricky. So being positioned long dollars, long stocks, over the last couple of years, that hasn't been the most fruitful of strategies. But at the end of the day, I still do think the US is in a better position than a lot of the other countries at this moment in time. So definitely something we need to keep an eye on. US related assets. Japanese yen has a lot to give back if that does continue to trend higher. So keep an eye on your Japanese yen. You can see the US dollar trending higher against the majority of these other currencies. With the Japanese yen, it's not. It's still continuing to move its way lower, which is pretty outsized Japanese yen strength. So Japanese yen strength, US dollar strength, equity strength, probably something I'd keep an eye on going forward. But I still do like those equity trades higher from here. Whether it wins or loses is another question. Let's see if it pans out. But as I said before, being long equities is not the worst idea, even if it doesn't make complete sense. But to me, I think it does. So we'll see how they pan out over the coming days ahead. So it's economic calendar. So I was thinking about what else I had to cover. Economic calendar, there's not really much out today of the course in terms of the economic calendar. Not much yesterday, not much today. Tomorrow we get a bit busy. It's PMI day out of the world, basically. You got kind of across Europe in the morning, you got Australia, Japan in the overnight, you've got the US in the afternoon, you have the Bank of Canada expected to cut interest rates, which we will break down in a bit more detail in tomorrow's video. It comes into GDP figures on Thursday out of the US, then to PCE on Friday. So a bit of a busier end to the week, a bit of a quieter start to the week. But for me, that's kind of what I'm looking at. And US dollar strength makes sense, equity strength makes sense, even if that doesn't happen together. They both, to me, make sense anyway. But the Japanese yen strength, again, it kind of goes against fundamentals, but with a bit of risk off plays in the markets. Japanese yen strength is a decent way to look. But if equities start to push higher, it doesn't make a great deal of sense for the Japanese yen to push higher. So that's kind of what I'm looking at over the course of today. Best of luck out there. We'll speak to you again tomorrow.